Hi everyone, greetings. So today we are going to talk about the trade policy of the another impact of the government policy, the how trade policy. So what is a trade policy? Like normally organizations, business organizations, they want to actually do import and export, right? So but government always there to actually protect the importers and exporters from different malpractices. So sometimes this is caused by multinational companies. Therefore, government they are responsible to do some kind of protectionism activity. So we are going to talk about these little protectionism activities taken by the government in that level. So you can see the organizations. Despite of the benefit of international trade, governments sometimes believe that there is the nation's interest to restrict the trade. Right? This is called the protectionism. So what is protectionism? The use of trade barriers to protect domestic producers. Right? The use of trade barriers to protect domestic producers is known as a trade protectionism thing. So what is the reasons? Right? Why this protectionism they are using? You can see to protect jobs, to protect the local jobs. If foreign competitors really threaten the survival of the domestic producers, what happens? Sometimes entire domestic industry can be gone. Right? Entire domestic industry can be gone. So as a result of that, the protectionism is really important to protect the local jobs. And also, second one, you can see the protect infant industries. There are some local industries that they are very survive very hardly and very there, but these industries must be protected from multinational business because they can do huge competition they can give. For example, like it can be a local soft drink manufacturer, it can be a local farmer, it can be local agricultural provider. So we can easily import everything from outside cheaper. But what about the local industries? What about their jobs? What about their industries? Ne? So the new industry that yet to be what happened established and prevent dumping is another third one is prevent dumping thing. So there was a foreign producers sell goods below the cost in domestic market. It's good for the customers but bad for the other businesses, local businesses, to prevent dumping. So they call anti-dumping regulations are there. So they can't charge very low prices in the market also because it's good for the customers in the short run, but it will damage the entire local industry because their pricing policy will go down suddenly. That means they can't survive. And raise revenue from tariffs is another objective of doing protectionism to increase the government tax revenue from tariff. Tariff means tax on import. Ne? And government can use the trade barriers to restrict. These are the different trade barriers. Call this tariff, quota, subsidies, and administrative barrier. There are main four categories are there. You can see tariff, tax on imports, which make them more expensive. Quota, a special limit on the amount allowed into the country. Subsidy is the giving on financial support, such as grant or tax breaks. And the exporters, you can see these domestic producers face fierce competition from importers. So subsidies normally should be given to the local producers. They are not charging in taxes, but government giving the subsidies to the local farmers, the subsidies to local, imagine manufacturers, giving sometimes fertilizer subsidies for the agriculture purpose. This is a good example. Another thing is administrative barriers. Sometimes when you are importing, they are government putting some kind of like a bureaucratic or administrative barriers, some paperwork. So you have to get the license. When you want to import something, you must have that license, or you must show some kind of like a minimum amount of money that you must be have in the LC. You must open up a letter of credit and you must have some kind of potential amount like a minimum funding requirement, right? This kind of restrictions, using health and safety, environmental regulations, right? Without the certificate of the health and safety certificate, you can't clear it from the customs like that. These are the administrative barriers which prevent imports and everything. Sometimes unnecessarily you can't import because the government restricts. For example, European Union, there are some certain things are there. One is ISO protector. So everyone has to obtain the ISO certificate in order to import or export like that. So government can also influence the business by forming a trade bloc. Trade bloc, this is where the group of countries in the same geographical region, right? They get together and then they make a can see trade bloc, which remove the trade barriers, the geographical region. You can see a good one, SAFTA, NAFTA. Ne? NAFTA stands for North American Free Trade Agreement. Ne? South American. This one, North America. This is mainly NAFTA stands for the. There are main three countries: US, Canada, and Mexico. right? So like that, and we have South Asian one is there, Regional Economic Cooperation called SARC Association is there like that. The government can have another like a it's like a very making a trade bloc or economic union is very organized, well organized way that can reduce this impact from the uh, globalization. This is where a group of countries in the same geographical region sign a trade agreement to reduce or remove the trade barriers. The main benefits to business of a trade bloc include the opportunity to specialize the production of those goods and services which they can produce more expertly or at a lower cost. That's the main benefit of a business having trade block. You can see you can have a specialty of getting a specialized production with the goods and services which they can produce more expertly on at a lower cost. And access to wider market. Imagine if you be in a trade block, let's say like a European Union, imagine you are in a NAFTA, so you can easily get the specialization benefits are there, and access to wider market. You can access a large number of countries and lower the cost. How? Due to economies of scale, it lower the cost and it protect the from large predatory multinational firm outside the block. So they get the automatic protection from the large MNCs. However, these are disadvantages. Also, you can see there are good side as well as bad side because always you should know the both side of a concept. What are the bad side of a trading block? You can see it might protect inefficient businesses sometimes or lead to conflict with the tensions. Sometimes all local businesses are not efficient. They are inefficient businesses. But this protection, this coverage will go to the all industries whether it is efficient or inefficient. Sometimes as a result, who will penalize at the end? Customers will suffer because they have to spend a lot of money for the local product where we can easily import it from the outside, a good quality product from external world. But because of the government restriction, right, they are not giving, allowing to import from the outside at the cheaper rates because to protect, in order to protect this inefficient supply local, right? Inefficient local suppliers are there. So that's another very good argument against the protectionism because who protect at the end? Huh? If it's efficient producer, okay. Huh? But if what happened in inefficient producer, they are unnecessarily charging high amount. Right? Unnecessarily charging high amount. If example, if I take like a small example, let's say imagine like coconut now. Now, local coconut industry is actually can see in a situation of like a going down, dropping because the coconut estates are not normal, like they're reducing. The cultivation is also going down, and their supply is actually gone down heavily, right? Because a lot of urbanization and people start like converting their lands, coconut lands, into the other residential areas, and then as a result of that, number of the coconut trees and the supply of coconut gone down. So there's a local industry for coconut, right? I'm talking Sri Lanka. But imagine, but that local price for coconut right now is ranging from 100 rupees, right? And above, like around 90, 100 rupees. But you know, like this coconut supply, because we have a shortage of coconut supply right now, high demand but low supply. That's why this much of a high price is there. So, but we can reduce this price. How? By importing. We can, by nearest country, India, we can import. There are so many like a coconut cultivation and supplies there. You can see some areas like Kerala. So this coconut is heavily you can supply. So, but government, they are not allowing that to happen because this they import this coconut from other countries. Like then our local industries, the local farmers, the local estate owners will be their industry will be gone and the price level will reduce. We can definitely reduce the price now 100 rupees to 50 rupees. Imagine, so it's 50% gone now. So, but why they're not doing? Because in order to they are saying they want to protect the local infant business. But are they efficient? Why they are that much of inefficient? Who suffers at the end? Customer suffers at the end. Like that, that's the main argument against this protectionism. They say always there's a conflict and tension because benefits are not shared fairly between the countries, and always they might protect the inefficient businesses. That's the thing. So we must give them some chances for the people also to import cheaply. If there's opportunity to import cheaply, why you always purchasing from inefficient people? That's why we should always give the first priority for the local producers, but we should give some quota some to the importers as well. Okay. Now we talk about the effects on interest rate of business. It's called monetary policy. Now fiscal policy is over. You can see government expenditure and taxes. And talk about the monetary policy main weapon of the monetary policy is the interest rates, the bank interest rates, because you know that thing when the bank interest rate, the money supply can have a huge impact. When bank interest rate increasing mean what happen? People will go and deposit their money in bank because they can have interest income. So higher the interest rate, lesser the money supply, because people will go and deposit their money into the bank because of the interest income. But when the interest rate going down, like right now in Sri Lanka, normally interest rate like 5%. USA it's like 3%, 4% general interest rate. Therefore, a lot of people they not saving that money in the banks. Therefore, alternative options are there like share market, like real estate, like gold. Which is this high return you can expect from those investments. So when there's interest rate rising, there's a money supply. What happen? Will go down. But interest rate falling, interest rate money supply will increase. So money supply increase means more money will circulate in the economy. When more money circulate in the economy, what happens? So everyone have something to do with their money, and then their investment and the spending consumption will increase. So economic activity will be increased, GDP will increase. That's what expected. But same time, inflation also increasing. Okay, it's like an economic topic, but you can see these are the impact which analyze as a result of the interest rate. What kind of impact is there on businesses? So you can see this is the interest rate is usually controlled by authorities. Authority means main authority is central bank. We call Federal Reserve Bank. In US it's Federal Bank of USA. In Sri Lanka it's called Central Bank of Sri Lanka. So every country there's a federal bank or central bank is there. They are the authority who actually controlling the bankers. They are the one who give this information restrictions, interest reduce the interest rate, gazetting, and thereby looking at the economy, they are taking these decisions. So and the use of interest rates helps control the economy. It's called monetary policy. The higher the interest rate means that it's more expensive to borrow money. So demand in the economy is likely to fall. In contrast, lower interest rate will increase the demand in the economy because it will be cheaper to borrow. So at all, lower the interest rate means cheaper to borrow. So changes in the interest rate can influence in the business. Generally, high interest rates are bad for the business for the following reason. High interest rate anyway, no one like to pay high interest rate. But pensioners and other people, they will like to have the high interest rate because they can easily get a side income by investing, putting FDs and everything. But high interest rate anyway, that's a bad step because people can't take a loan. Huge interest cost, borrowing cost is there. So this one I like to actually now share that the short note thing, which you can all the impacts of interest rate you can summarize like this way. Right, we talk about trade policy. Right, you can see the impacts in examination. Also, sometimes they might ask to like 3 mark question, explain, or even 6 mark question, analyze question. So look at the effects on interest rate on consumer spending. I have given in a tabular method to increase because BLT format. Then you can easily understand this method. BLT because leads to therefore. Then and also I have given the evaluation point also at the same time. So generally, high interest rate would bad for the consumer, but not all of them. Look at this first point. When interest rate rises, house owners' mortgage will be affected negatively. That will definitely happen. House owners' mortgage will affected negatively. Mortgage mean the bank loans that you are taken from keeping your property as a collateral. Then interest rate rises, house owners' mortgage will be affected negatively, and this will lead to increase the mortgage payments. This will lead to increase the mortgage payments. So therefore, they will have a less disposable income to spend. Therefore, they will have less disposable income to spend. Why? Like most of their money they have spent for the loans, right? And also you can see other side. However, cut in consumer spending due to higher mortgage payments. Huh? And there was severe for the construction industry and housing market because many people buy houses using mortgage. Like everything I summarized like that. So second part just go through. Only few points are there like this impacts on you can see interest rate increasing and interest rate decreasing. Everything summarized in this section. So effect on high interest rate. There are two impacts I had discussed here. When interest rate rises, what will happen? And secondly, when interest rate falling, what will happen? So effects on interest rates on consumer spending, and this one effects on interest rates on business and consumer spending. Everything I have given like that, 3 impacts for each, right? So First impact you can go through, will summarize this lesson again. You can see interest rate is a main weapon or main tool for managing the economy. So when interest rate rises, cost will increase for the business, then reduce the profit again. And also this will cut reward of the business of the owners. You can't give a good dividend. So this will shrink the funds available for the new investment, and this will lower the levels of investment also. And second one, you can see when interest rate rises, cost will what happen increase for any business. Any business, the borrowing cost will increase. As a result, the purchase of capital good discouraged. You can't go for the purchase of new machines, motor vehicles. And as a result, business will postpone the cancel the investment project, and they may be failed to keep with the changes in technology. So you can't go to new equipment, new machines because of the high interest rate. And this could affect their competitiveness, quality will go down, so and so. So this is like a 6 strands. You can see 6 links are there, each point like that, no? An interest rate rise, consumers are less willing to borrow money from banks, and then economy will fall and have impact on the every business. And business that produce goods bought with the borrowed money, like cars and houses, will going down, and they are likely to suffer most. Like that, so every point like that. So I'm given 6 strands for everything. Impact on consumer spending. We talk about this one. Again, increase the mortgage payment, severe construction industry will go down. When interest rates rise, demand for goods and borrowed money will fall. Like overdraft, credit card, loans become less affordable for people. Then people not spending on like items like clothing, jewelry, holidays, entertainment. These luxury items, luxury spending will be going down, and people will be expensive items like cars, furniture. They call white goods. What happen? Will demand will fall. Demand will fall of all white goods, or luxury good will fall. Third one, when interest rate low, going down, the opposite happen. Opposite happen. The savers will be hit. They can earn high interest rate, and then consumers are less willing to spend their earning, because they can spend that without spending. They can deposit in a bank account, and retired community most likely be affected from this, because they can get a good income from the bank. And as a global population ages, this impact of low interest rate on savings will be felt more, because a lot of people now aging population trend is there in the economy. Okay, so today we talk about the monetary policy also. The fiscal policy thing, actually we talk about the government expenditure and taxes. We talk about the competition policy, fiscal policy, how 3 approaches of government influencing business, infrastructure provision, legislation, and trade policy. And finally we talk about the how monetary policy impact on the business organization. Okay, from that we'll wind up today's session. From see you in my next session. Thank you very much. Bye bye.
Thank you,
Bye,
sir.
sir. Thank you.